It's been a minute since I've done a writing on Windows segment, so I thought it'd be a good day to explain why the bearish divergence technical pattern in Bitcoin is something that I've been obsessed with for a while and why it's so important to what's happening right now. Let me first preface it by saying that this week on Chicago Future of Finance, the technical target for support that I put on Bitcoin was 80K, and we got to like 81 today, so I wouldn't be surprised if there's some buying pressure that shows up fairly soon. But the reason why the bearish divergence is so crucial is because I think it's what a pyramid scheme basically chart will look like when it runs out of buyers. So let's go through it. Bitcoin's early crashes basically looked something like this. Bam, right? And then bam. If you think about a stock like Enron, which was a scam, which is very different than a pyramid scheme. The chart looks something like, I think Enron looked, it basically looked like that. Bernie Madoff's fund was like a straight Y equals X linear impossible chart that then once it was discovered, it just went like that. Straight down. So this one, which is typical bubble behavior, which Bitcoin showed in the past, overvaluation. That's what an overvalued stock looks like. Like if you think about the NASDAQ 100 in the .com, it kind of looks something like that, right? You know, and that's kind of what Bitcoin's looked like in the past as well. And then this is a scam for a stock, right? You find out that, oh, these people have been, falsifying numbers, Enron. So then boom, it just, comes apart. And then you've got the Bernie Madoff, fake Ponzi scheme, right? Ponzi and pyramid a little bit different. So then that question becomes, okay, what does the chart of a pyramid scheme or a multi-level marketing scheme look like? And the answers are not really obvious. We don't really have one. But what I have maintained is that it would look like a bearish divergence. So let's talk about what a bearish divergence actually is. A simple explanation of what that means is that even though the asset is finding a buyer at a higher price, it's getting incrementally more difficult to find someone to buy it at that price. So in my mind, that's exactly the way a multi-level marketing or a pyramid scheme would basically peak out. Is it keeps going up in price, but it's getting harder and harder to get there. So you're losing momentum despite price going up. It's a very nefarious pattern as well because it's hard to notice because most people are consumed by the price action and so they see an upward trend and they feel safe, but in reality it's getting harder to find a buyer. Bearish divergence is when something is making new highs, but as it does, the momentum is slowing down with each high, okay? So here's your chart of higher highs, right? You're making higher highs. However, if it's on lower momentum, which typically the easiest way to do it in technical analysis is using relative strength, RSI. If it's making higher highs, but the momentum as it's making those higher highs is coming down, okay? That's what a bearish divergence is. Momentum trending downward while price is trending upward. So we can see this is exactly what's happening in Bitcoin. It's making higher highs, but the momentum is going down. This is the relative strength, 14-day basis, and this is the price. So it is very much in the definition of a bearish divergence. And actually, if you zoom out, here's the long-term all-time chart of Bitcoin, uptrending in price, momentum is decreasing. And here's what the NASDAQ looked like in 2000 in the .com bubble. There was no bearish divergence. Momentum was increasingly just persistent until it exploded. The reason why stocks peak like this and explode is because they have underlying value that is calculable. How much profit, how much revenue, how much product a company is selling versus its price. And so eventually that gap becomes so wide that it explodes. It's also basically what the tulip bubble looked like as well. Not really sure if any of these charts are reliable for the tulip bubble. I don't know, this one looks kind of interesting. But generally, the idea is, it's a flower. It doesn't really have great value. So it's more like a a typical overvaluation bubble than necessarily a multi-level marketing scheme or a pyramid scheme. I think the best way to think about a bearish divergence practically or visually is to think about a line of people waiting to buy a product. Okay? Let's call that product Bitcoin. Let's say you've got this line of people waiting to buy a product. You can see the line, you know that there's buyers. The important thing is that when you run out of buyers, it doesn't necessarily mean that this guy is selling. Running out of buyers is a very different technical situation than having too many sellers. So people like to casually say, why are markets up or why are markets down? Oh, there's more buyers than sellers. But actually the order in those events makes a big difference in what the chart looks like. Because if sellers come into a chart rapidly, it just kind of goes straight down. But what happens when you get incrementally fewer buyers left is that the potential for your price to go up just decreases. So you've got a long line of buyers, the price goes up, and then once you kind of get to the, theoretically kind of that halfway point, you start to see that there's fewer buyers, it slows down, and the person willing to buy is not there as readily. You can change hands pretty quickly and sell the next person rapidly when you've got a long line of people. But as you get to the end of the line, the momentum is going to slow down. And what happens is when you hit the end of the line, it doesn't necessarily crash, okay? Because if the point of it is to buy it to sell it to the next person, somebody will come in at a lower price. And because you had this momentum and a long line of buyers, there's unlikely to be this big, sharp crash when you actually hit the end of the line of buyers. Now, what's going to happen is that this last buyer will become essentially, in theory, kind of the first seller. Because if this guy's buying and selling to this guy, this guy's buying and selling, this guy's buying and selling to this guy, right? That's why the price starts out, pretty quickly moving higher, but then plateaus. The plateau is what's really important because it's not that there's selling pressure, it's there's lack of buying pressure. So lack of buying pressure creates this plateau. And then eventually this guy says, okay, well, there's nobody left to sell it to. And in theory, the first sale that will be made is he'll sell it to the next person at essentially the exact same price. So that's kind of your plateau of when you've hit the peak. And then from there, that's when the sellers that previously were buyers might start to sell if they realize that, okay, the price is coming down and they only bought it for price appreciation. So the rollover for a multi-level marketing scheme or a pyramid is much more like that. That's the contention I've had for some time, is that ultimately when a pyramid, not a Ponzi, a pyramid or a multi-level marketing scheme peaks out, it's going to be through a plateau and a rollover. And this is essentially what a bearish divergence is exactly because, the chart basically looks like this. It's making new highs, and then the previous highs are basically the same as the old high, and then you kind of get some action like this. So the good news is that I think you will kind of have a slower descent, maybe some crashes along the way if there's panic. But the rollover is a very sneaky way to see the end, a permanent end of an uptrend if the underlying asset is not producing any value or cash flow or anything else. It runs out of buyers and it peaks through a plateau, a flattening out, and a rollover. And that's essentially, that's exactly what the chart of Bitcoin basically looks like right now. As this whole battle, this is like 100, this is 100 to 120K up here, where our most recent high was very close to the last high. That's what I think the chart of a multi-level marketing scheme looks like when it ends and runs out of buyers. So not only does the bearish divergence, in my mind, perfectly map the end of a pyramid scheme or multi-level marketing scheme running out of buyers, which matches Bitcoin's technical pattern, it also matches the narrative, because if you think about, in a practical sense, if you've got this great sales program that is spread across the world, across every classification and demographic, who would mark the peak buyer, the final buyer? And of course, that would basically be the US government, which is kind of where we are today with the Republican Party and White House and Trump being as ostensibly pro-crypto as they could be. Kind of makes sense. That would be the top of the pyramid.